Michael Scholl, Chairman, Market Field Asset Management, joins us live from New York. Michael, good morning. Thank you for joining us. What do you make of last night's rally in Dow and in the Nasdaq?
I think that we see once again that the U.S. economy is pretty strong, and I think investors are becoming comfortable with that. And I think the U.S. equity market looks well bid at this point in time. So, we weren't surprised to see it come back. I think you saw in particular retail stocks breaking out to new all-time highs yesterday, and that's pretty encouraging.
Right, Michael, hi, morning. Does it seem like the market's optimism about Greece and that the swap deal is going to go unabated with private creditors as well is justified?
Well, I said before, I think that Greece really became irrelevant to the U.S. market several weeks ago. I think it helps that the deal goes through. But I think that why the U.S. market rallied is that U.S. data looks good and U.S. corporate earnings look good. And in particular, the consumer, is showing itself to be extremely resilient. And I really think the U.S. market, is really performing well because of what's happening in the U.S. I think there's some relief that Greece is heading towards a settlement rather than a default. But, I think most of what's good about the U.S. market is because of the internal strength of the U.S. economy.
What do you make of outperformance in the Nasdaq? Because it is evident that global money managers are clearly putting the money to work in IT stocks.
Yes, I think that to an extent people are willing to see technology as a special case. So even those people who don't necessarily yet believe in the U.S. economy are willing to believe in the quality of U.S. technology companies. But as I say, one sector which has done even better than the Nasdaq year to date is the U.S. consumer discretionary sector, the retail stocks, and that really is about the domestic economy itself, and probably hasn't had enough attention. But the strongest portion of the U.S. economy, actually, since the end of 2008 has been the consumer discretionary sector.
Michael, last night, the U.S. largest burger chain, McDonald's, they've cut their annual guidance. Do you see that could be a harbinger of consumer spending?
No, I think that you put hamburgers on one side and consumer goods on another. I think what it really does show you is that what you saw at the end of 2011 was a lot of people who got back into the equity market chose to do it through defensive names. And, McDonald's is a high-quality defensive name. That isn't necessarily where you want to be at this point in the cycle. Our view is if you're willing to take the risk of owning an equity, you want it to be an economically sensitive equity, and you want to be trying to make money and not just simply, collect a dividend.